All right, so I think I'm going to go ahead and get started. Sean and his new G-Ride. Yes, this is my ride, my Challenger. All right, so the room I was in was really echoey, so I moved over to my car just so I can make it a little bit easier for everyone to hear. One of the topics that I want to hit on today is kind of some creative strategies to help your buyers in today's market. So we'll be going over that a little bit more. I'm going to be sharing my screen right here to kind of show you what interest rates are doing and give you my next week projection as far as what I believe interest rates are going to be doing. So I'm going to pull this up real fast so we can see that. All right, guys. Well, welcome to your mortgage update this Monday morning. It is a holiday. All the markets are closed. So there's no trading happening today. No rate fluctuations will happen today. Everything's closed, but I want to show you kind of what's happening with the markets and then kind of help prepare us for what's to come. Now, last Monday of the previous week, about 10 days ago, we started a slump and we saw rates kind of, the bond markets got hit really hard and we went all the way down about 200 basis points before making a rebound last week. So we're on that uptick back into lower rate territory. And there's a big level of resistance that it's going to be very important tomorrow morning to see what happens when we hit that red line. That's called a Fibonacci level. So if we can pierce through that, we're going to see lower rates into next week. So that's a good thing. The long-term projection, and if you guys can mute yourself, that'd be helpful because I think there's a little bit of feedback. But the long-term projection is I think interest rates are going to be a little higher this first quarter, and then second and third quarter we may see rates dip down lower again. So right now we're in the high twos and on a 30-year and the mid to low twos on some of the FHA VA products or 15-year products. FHA and VA have better rates than conventional loans for the most part, but we're going to see this trend here hopefully continue if we can pierce through this layer of resistance, which is this red line right here. Now, one of the things I want to talk to you about is all of you know that right now it's very difficult for your buyers in this market. We all know it's difficult. So one of the things that I've created is somewhat of a hybrid bridge loan. If you have customers that would like to buy previously to selling their home, we can do a home equity line on the home that they currently have that they're looking to sell later, use that as the down payment for the new purchase. And then on the new purchase, we can set that loan system up to be two loans. So one, which is going to be their permanent financing, and then another second mortgage so they don't have to put much down. And then once that other house over here sells, they would take that equity and they would pay off that other second mortgage to be left with one single mortgage. So it's kind of a hybrid bridge loan. Again, a home equity line on their current house, frees up that cash to put the down payment on the new house. And then depending on their transaction, how much they want to put down, we'll either do one loan or two loans. Home equity lines are free. So I have a contact at BMO Harris that helps me with these, and we will set them up with a free home equity line. There's no cost to them. And then they don't have to use that money until they find a home that they want to buy. So as you're talking to buyers that have a home that's for sale, let's get them into the conversation of doing a home equity line on that current house so they can use that equity to buy the new one. Again, home equity lines, when you do a home equity line outside of a purchase transaction, there's no fees for them. So this is a very important tool to be able to use so that you're not going in with an offer with a contingency. Otherwise, they'd have to sell the house to get that equity. Now we're utilizing that equity in the form of a home equity line for the down payment on the new house. Now, the only caveat to this is they have to be able to afford all of the payments on both properties in order to make this happen. So it's going to be important to have that discussion with your buyers up front to make sure we do the pre-qualification in a way that eliminates the contingency. If we can eliminate the contingency on the sale, and then we can hopefully run it through our system and get an appraisal waiver, then we can have a double whammy. Remember, the goal when making an offer for our buyers is to eliminate as many contingencies as physically possible. So lenders can run the address through our system up front to see if we get appraisal waivers. Then we can transfer into the offer that we're going to waive the appraisal and the contingency. And then we can get their loan fully approved through underwriting up front before you make an offer and have no financing contingency. And then we can take the equity from the house they're going to sell, use that for the down payment, so there's not a contingency on the sale of their home. So we really need to think outside of the box with our buyers, but we need to do it at the point when we're talking to sellers up front before they start looking for homes, because we need to set them up for success just down the line. So there's a lot of different programs out there and different ways and strategies that we can help set these buyers up for success. If you have them, let's talk about strategies before they list their homes. Let's really get way in front of it, and you're going to look like a superstar when you talk to them, because they won't know all of these secrets. And again, I'm going to try to keep this update as short as possible. But if anyone came on has any questions regarding this program, feel free to jump in, unmute yourself and jump in, or write some comments in the actual chat. So do you have a brochure we can share? I don't have a brochure on this, but I can create one. So Christy, let's put that on our to-do to get a little brochure on this bridge loan. It's not really a bridge loan, it's a hybrid bridge loan, I guess you can call it. And yes, they can purchase with no time frame to sell their other. So if you can look at, if they can cover both mortgages, and let's just say they want to buy the house now and take their time moving into it before they sell their other one, it's a perfect tool to do that as long as they could carry both mortgages. Knock lending. I'm not sure what knock lending is. Now there are true bridge loans. True bridge loans are a private money loan that will give them the equity they need towards buying the new house, and they won't count the existing mortgage against them. But those are expensive. Those are in the 8 to 10% rate, and they usually have a couple points associated with them. So this hybrid bridge loan is a lot cheaper way of getting into helping your buyers buy the home prior to selling. And there's very little cost associated with it compared to just a normal transaction. It's just kind of setting it up for success. Any other questions regarding what rates are going to be projected to do? I honestly feel we're going to have a little uptick, but I believe that there's going to be a little pullback in the stock market. Right now we're oversold, I believe, and most people think that we're oversold in the stock market. There will be some sort of a correction, I think, in the near future. And then I think at that point, rates will get a little bit better overall. All right, so absolutely, we will get a flyer put together for you so that you can present this to your buyers with the proper verbiage in that for you. Any other questions that are anything mortgage related? If you have any weird scenarios that your team's going through right now, any questions on types of loans? Also keep in mind, guys, there are stated loan programs, no ratio loan programs available for those people that have 680 plus credit score and self-employed for 2 years or more, and they don't need to show any income. It's all down payment based. So 25% or more is required. And the rates are in the 5s to 7s, depending if it's a primary home versus an investment property. So just another tool to help you guys. If you have buyers that don't think they can buy, they may, if they have enough money, they may be able to get into a no ratio, which is basically you don't put any income documentation at all on the application, but you do have to prove that you've been in line, the same line of business for 2 years or more. See if there's any new questions. Any questions? Don't be shy. All right. Well, I wanted to keep this short for you guys so you guys can go out there. Anything for business for 12 months. So been in business for only 12 months. Um, if they're self-employed, no, they do need that 2 years. And the main reason is because a very high percentage of businesses in their first or second year do not make it. So most investors, most lenders will require 2 years self-employed. Now, a trick to that, let's just say that person has owned the LLC for 2 years, but they've only been in business actually running that business for 1 year, for 1 year tax returns. All we need to show is that that LLC has been in existence for 2 years to do that loan. So if that LLC has been around for 2 years, yes. If not, they have to have that for 2 years. So anyone that's self-employed needs 2 years history before they can get a loan, even if it's not a, if it's a stated income loan, they still need to show that 2 years. Now, if somebody's been in business for 10 years, but their 2019 tax returns were terrible, but their 2020 was phenomenal, we do have a 1 year tax return program that would allow them to use just 1 year if you've been in business for 5 years or more. So that's another tip out there. All right, any other questions? What if they put 30% in 1 year? The only option would be a true hard money loan in that case, if they had more than that down. Most, if not all, of the investors that try to play in that non-QM mortgage, which is kind of a hybrid between a hard money loan and a conventional loan, they will all require that 2 year for self-employment. All right, guys, we kept it to 15 minutes. I'll open this up to any questions if you have any. Don't be shy. All right, looks like there's no questions. You guys are very welcome. If you have anything else that you need, keep in mind rates will continue to be low. We may see a little uptick, but they will drop, I believe, through the year, and those should be in the 2s and 3s the remainder of the year, just kind of going back and forth. All right, guys, have a great day. Have an enjoyable week and be very successful. Call me if you have any questions.